Yeah, they have a vested interest now in the success. They're already part of the team, right? So this elevates them to a next level where not only are they a member of the team as far as an employee or a contractor, but now they're also a stakeholder from the standpoint they actually have, as you just said, skin in the game, where our success becomes their success.
Have you ever wondered what it takes to successfully raise money? I have worked with hundreds of capital campaigns across dozens of industries, and I'm here to share with you proven methods for raising money in record time and at the lowest cost, while also obtaining capital at the lowest price. My name is Karl Dakin, and welcome to Motivated Money. So, my name is Karl Dakin, and this is Motivated Money. Thank you for joining us today. We are going to be talking about a critical question common to all capital campaigns, which is, who are my investors? With me today as my guest is Matt Walsh with Splish Naturals. Matt has been involved in a couple of capital campaigns, typically what you call a friends and family private offering. And he is now designing a brand new campaign where he is actually going to apply the motivated money process to raising capital. And we'll get in a lot of detail about that in today's program. Matt, if you would, why don't you share just a little bit of information about yourself and Splish Naturals, and then we'll dive into some tough questions.
Sounds great. Thanks, Karl, for having me. I appreciate it. Again, I'm Matt Walsh with Splish Naturals. We are a wellness-driven CBD company that was launched in September of 2018. And beginning probably it was towards the end of 2019, December, early 2020, before the COVID pandemic kind of took a lot of people out, we launched a friends and family campaign to sort of start boosting us to the next level, both in product development, supply chain, security, marketing, et cetera. And it was a campaign that I've used before in other businesses relatively successfully with a very close group of friends, family, as the name indicates. And we were able to raise enough money to really kind of get us to the point where we are today, where we're now, I kind of like to say we need to get super serious about the capital we're going to raise. We've established the company, we've established a customer base, we've established a product line. We've been taking a deeper dive in marketing and promotion. And so now this next chapter will help, as the first chapter did, took us to one point. This next level round of fundraising will take us to even a higher level and bring us, closer to where we want to be as far as our customer base, our marketing campaigns, our promotional opportunities. And in this case, back in early 2020, we weren't thinking about mitigating supply chain issues, but now we are, and we want to make sure that those are completely shored up. So anyway, we're excited about working with Karl. And as Karl mentioned, I have gone through the Motivated Money boot camp, which was an amazing boot camp. I enjoyed it very much. I learned a lot. And truthfully, it gave me a higher degree of comfort with this next process and truly understanding what is involved and why. So
Matt, give us a little bit of background. What is it you sell?
Oh, there we go. I guess I forgot that. So Splish Naturals, as I kind of started as a CBD, we're a wellness-driven CBD company. We manufacture topical products that incorporate a host of high-quality ingredients, CBD being one of them. And when I say a host of ingredients, this incorporates high-quality therapeutic-grade essential oils, terpenes, carrier oils, waxes, CBD, different cannabinoids, actually. And the one thing that we are too is there's no measurable amount of THC in any of our products. And the reason for that is we work with massage therapists who use the product day in and day out. We work with professional athletes, we work with amateur athletes, we work with a host of people that are either continuously being drug tested or have the potential being drug tested and can't afford to sacrifice or take any risks of losing their job due to testing positive for THC. So that actually opens up a whole nother demographic for us because of how we structured our company. So in a nutshell, yeah, we manufacture products that incorporate CBD for topical use to mitigate pain, inflammation, aches, swelling, bruising, etc.
With a description of a product like that, you would think that everybody on the planet has pain at one time or another, and therefore raising capital should be a slam dunk. And yet, your experience, like everybody's experience, is that it's hard work. It requires proper preparation, good communication, and a variety of other things. And in the Motivated Money process, we talk about styling a capital campaign to fit it to those investors who are most likely to invest. But to start that whole process off, we have to ask ourselves, well, who are these investors? Who are people who may love you more than you love yourself, who are going to be willing to part with their money instead of spending it on something else? So the common approach to raising capital that most people follow is that anyone who has money is an investor candidate. And that includes anybody with a small amount of money or a large amount of money, doesn't really matter. And they go out and talk to these people one at a time, and they expend time and energy pitching a deal that may or may not fit up with them, that the person doesn't care about, that there's just no nexus, there's no combination of why this person would give money to this business, because there's no commonality. And yet this is kind of the tried and true. This is what everybody teaches when you're raising capital, is you go out and stand on a soapbox, you do a good choreographed song and dance. And if you're really good at it, they say somebody should stand up and write you a check. But there's really no logic to that. And so we're going to come back to this, Matt, and say, in your experience of raising money from friends and family, did you raise all the money that you wanted to raise?
Quick answer to that one is no. I established a minimum amount that I needed to raise, both legally and practically, to accomplish some of the goals that we'd set out when we launched the Friends and Family, and we reached that. So as far as minimums and slightly above, we reached our goals there. As far as the entirety of the campaign, we did not reach it. And there's probably a lot of reasons why, whether it's because I don't have that many friends and family, I don't know. Or
I was going to volunteer that as a possible outcome.
And yet there's things that are going on today that weren't going on maybe 5 years ago or 10 years ago that make people a little bit more anxious about parting with their hard-earned money. It started out as not a super big challenge, because I did have people that were, one, trusted myself, believed in the company, believed in the products, were willing to part with their cash. But now, as time has begun to mature, it's become more challenging to bring in additional capital through this type of fundraising initiative.
Yeah, I mean, essentially, you mentioned a couple very important points. And one of them is that the people already knew you. Friends and family are in your network, in your sphere of influence. And it's almost impossible for someone to make an investment without knowing you, because inherent in that, as you mentioned, is there's an element of trust and integrity. They're saying, oh, I'm going to give them some money. Am I ever going to get my money back? And if they don't know you, it's impossible for them to get to that point in making an investment decision. And at some point, you run out of your network. Yes, you have a limited amount of friends. It might be in the thousands, but that still may not be enough to get you to where you want to go in your capital campaign. And so at some point in everybody's campaign, they're going to move from people they know to people they don't know. And it just got geometrically harder than at that point to make a pitch, because you're saying, hey, I can make you a lot of money on this, or I can make you a little amount of money on this investment. But if you don't know me, why would you give it to me? Right. You're competing with everybody else who's also might ask them for money. And within the group of the people asking, there's going to be people they already know. And so you automatically, in friends and family, are going to hit the wall somewhere. Sometimes you've got a large enough network and the fit's good and the amount of money you need is low enough that you can hit all of your capital goals. But as you grow and you start scaling up and including your capital campaign, that's going to get harder to do. So at that point, we start talking about, well, who should give you money? I mean, who has a reason to give you money? And in the motivated money process, we talk about stakeholders. These are people who are going to benefit from the success of your business without ever making an investment. So this can include people who are already selling you product, vendors and suppliers to you. It could be somebody who's reselling your product downstream in your supply chain as a wholesaler, retailer. You may find that setting up a manufacturing facility will attract the attention of the local government because you're creating jobs and new tax bases for them. It could be a common cause where you're trying to save the planet and you have something that's going to take care of CO2. So there's all these different reasons why somebody would go, wow, I hope they succeed because I'm going to benefit from that. And if we find these people, we identify these people, then we start asking the question, well, would you consider being an investor because you're already going to win in this game because of the success of my organization? So Matt, in that, we've had a number of conversations prior to today about what is a stakeholder and how would you describe a stakeholder from your standpoint?
From my standpoint, a stakeholder is, an important or a meaningful stakeholder to us would be an individual, a company, a group, a government agency, whatever it ends up being, that is invested not just in what their return might be, but what the benefits may prove out to be along the way. So that, it's one of the things that I've always been a little bit fearful. One, we always hear about, venture capital stakeholders, and all they really care about is the bottom line. And with some, it may be true. Some, it may not be. In my mind, there's a bit of a stereotype. Using our products, is going to benefit by the jobs we are going to create, the people we are going to help, the revenue that we're going to help them generate somewhere down the line. Obviously even, my existing stakeholders as far as shareholders, because they're not just invested financially, but they're invested emotionally, spiritually. They want this company to succeed. And therefore they do a lot more for me than simply, look at a balance sheet. And when you aggregate all that together, to me, that gives me, certainly a higher degree of comfort when I take the next leap to raise capital and seeking the right type of investor or the right type of stakeholder. So,
Matt, you pointed out that the people who work for you, they have a stake in the success of your business because it's their job. Their salary, their compensation, maybe their retirement, everything that goes along with the job is based upon you not only continuing to operate, but to grow and grow up in size and scale. So one of the stakeholders we might consider in putting together a capital campaign plan might be to go to all the employees and say, hey, would you take a 20% cut in pay in exchange for equity in the company? It could be a profit sharing. It could be equity options, these kinds of things. But right there, we've already changed the dynamic from someone we don't know who doesn't really have any stake in the game, because until they make the investment, why should they care? But with an employee, they're in it. Their skin's in the game, so to speak.
Yeah, they have a vested interest now in the success. They're already part of the team, right? So this elevates them to a next level where not only are they a member of the team as far as an employee or a contractor, but now they're also a stakeholder from the standpoint they actually have, as you just said, skin in the game, where our success becomes their success.
Yeah, and so in making a pitch to someone who has a stake in the game, it changes the tone. It changes how we communicate it. it may change the offering deal because we now know what they're going to care more about. We can tailor the deal and maybe even amplify some of these outside benefits to give them a greater benefit out of the whole thing.
Well, they may very well. Oh, sorry. Go ahead.
No, go ahead.
They may very well be asking the question to themselves, or to me, what's in it for me? And when that changes from bottom line dollars to the fact that what's in it for them, that may end up being more important than the return on the investment, which, I'm not going to minimize that yes, everybody wants a return on their investment, but with certain stakeholders, we may be helping them to accomplish certain goals, whether it's, creating new jobs, maybe bringing on new suppliers or new vendors, where, it may be that we get approached because somebody's going to look at us and say, wow, if we put money in them and they start to grow, that's going to help our business grow. And it kind of feeds on itself. And to me, that type of investment is extremely meaningful, because now it's not just dollars and cents. It's like we're all of a sudden almost like we're a team now, and we've got more than just one common goal, and that is a financial return on the investment. And to me, that's super important.
Yeah, it changes everything. It's easier to identify who to talk to. You can put them into categories, create a profile. Even if you don't know them, you're going to have an understanding of why they care. Mm-hmm. And that then becomes the framework for putting together your deal or your offer of what you're going to propose to them. Back to the common approach of raising capital, it's usually like, well, I'm going to give up 20% of my company for $100,000 or $1 million or something. And that may be a good or a bad deal, depends upon the company. But when you pitch it to someone who doesn't know you, they have to ask themselves the question, well, who is this person? Do I trust them? Do I understand the business? Is their market okay? They may not be able to answer any of those questions. They may be unwilling to learn the answers to all those questions. And your capital campaign just slowed down. And even at the end of the day, they go, I like you, Matt. I love what you're doing, but I'm not going to give you money that way. I don't like the deal structure. And you didn't give them any alternatives. So that they're going to walk away for no other reason. Today with the economic crisis that we're in, we're seeing people doing shorter and shorter timeframes between an investment when they'd like to get their money back. And if you walked up to them and said, well, I have a 5-year proposal for you, they would say no. And you didn't give them a chance to talk to you about a 1-year deal. Because you started out of the gate with an assumption that whatever you were going to offer, they were going to accept.
Yeah.
So in this talking about all of your stakeholders, you and I have kind of come to the conclusion that maybe one of your largest, best, strongest stakeholders are your customers. What's your thinking on that?
And we've got a diverse group of customers that range from, corporate spas to obviously individual customers to athletic groups. I think that in this particular environment, I think there's some absolute upside to approaching them. I think there's, just from everything I know from my years of experience within, say, the spa industry, I also can see the challenges equally as well. But I think that there's a subset of individuals or groups within our stakeholders customer base that would be fantastic investors, because not only will they help us, but they already they've already visualized, they've already seen, they've got, or at least they have the vision to see how this investment is also going to help them, near term, midterm, far long term. And so I think that depending on the actual customer stakeholder, yeah, absolutely, there's great benefit. And I will say equally as much, there's others that, they might say, look me in the eye and say, oh yeah, I'd benefit, but I already know right out of the gate, based on my experience, that trying to get a financial investment out of them would be challenging. Now, maybe the way they would consider investing is, you know what, let's increase our orders. Or we're opening up another location and we want to bring you there. And so it's not to say that as a stakeholder that they're not vested financially, because they are, because we're helping them grow their business through the sale and use of our products. But if it came down to the point where, no, they're not going to write a check, but they see the benefit of our growth, there may be other more creative ways for them to increase their partnership with us, so to speak, either by expansion, increased orders, sharing our products with some of their colleagues, some of their stakeholders. So I don't think there's a super straight line here, but there's clearly benefits.
Well, and this is one of the, I will say, attributes of the motivated money approach is we're not going to assume that you're going to make a single offering, that it's going to be one size fits all. If you have 4 flavors of customers, then maybe we create 4 different types of offers. And each one of those is tailored and customized to give them what helps them most. If this is a company that's a spa that says, hey, I'd invest, but I've got limited money, then maybe you can work out a deal with a discount on the product, or you can do a co-promotion with them to bring more customers in their door, which gives them the money to buy more of your product. But this flexibility is inherent in the fact that you're now talking to them not as, I'm going to make you take whatever offer I put on the table, but hey, look, I understand who you are. I understand how you benefit. Let's see what we can do to custom craft something that's going to give you the biggest bang for the buck. And we're going to make that our offer to you. And then the next customer, maybe we'll change our offer to them.
One of the things I gained from Motivated Money, the boot camp, is, and it was a bit of an epiphany for me. If I think back, I might think about how I started a friends and family and how I was comfortable there, and how I've already stated I wasn't comfortable kind of going after institutional, professional venture money. However, having completed the boot camp and understanding the direction and how the foundation of who we're trying to bring in, as a stakeholder, as a shareholder, knowing that it's not just about money and that there's mutual benefit by investing, whether it's in discounts on production, whether it's increasing order flow, whether it's actual cash investments. To me, that was a big epiphany. And all of a sudden I felt like, oh, I can sleep at night now, because there are other options that make sense. And for me and the type of company we are, to me, that was super important. Because I would sit there and without this coursework and without your guidance, I might be thinking, oh, okay, I've kind of run out of friends and family and the people that might be investing. And so what's the next step? Yet taking, everything I learned in this boot camp, it all of a sudden became very logical to me. And it all made sense. And the minute things started being logical and sense, it made sense. That was comfort. And now I'm excited to move forward. I'm moving forward without any hesitancy, because I know that the next round of investment are going to be individuals. Yes, they may be putting up cash, but they're also investing because they see something else that's important to them with this investment.
Yeah, and this is part of what we're trying to get away from is we want to think in terms of the investor as a customer. We recognize that not everybody who could buy our product, who could be an investor, is going to invest. And we have a limited amount of time and money in which to go out and raise this new money. So we want to be efficient with our time. We want to start with those who are most likely to invest. Yeah. And get back then to selling product and services and so forth. Yeah. So with that, what we're going to wrap up for today's episode. Everyone who's listening to this episode, I would challenge you as a homework assignment. Go home, make a list. Ask yourself, who is benefiting from the success of your organization, whether it's a nonprofit, it's a startup business, you're in the service industry, it doesn't really matter. There is going to be a list, and suddenly the world is going to take on more form, and you're going to, as Matt was describing, it starts making logical sense on why you're talking to them and what you're going to say when you talk to them and how you structure your deal, and everything starts coming together. And that's part of what we're going to try to get across here. And so the motivated money process, we're going to talk about this on future episodes. We're going to be talking about how we go about determining what kind of capital we need. We're going to talk about how we communicate our offer or our pitch in the words of our investor rather than our own, so it doesn't look like we're talking about ourselves all the time. A lot of these techniques and activities all go together. So it isn't a 1, 2, 3 and go. We've got a lot more steps than that, and a lot of nuances on how to do this and do it best. But that's what we're going to try to share in this podcast. We're going to try to share all this information with you who are listening to this podcast and give you a chance to learn more about this. At the same time, I, as a consultant through my company, Dakin Capital, I'm working on a number of capital campaigns, continuing to build knowledge and more proof of how the motivated money process works. We're going to have complete systems that we are working with different business accelerators and incubators, where they will provide this as a 6-month program as part of their entrepreneurial support. And then Matt referred to the pilot we did of the boot camp earlier this year, and we're going to restart that boot camp this fall. And there'll be chances for some of you who are interested to maybe participate in that boot camp. But do your homework, give it some thought. Think about who really loves you more than you love yourself, because you are what they need to succeed. And therefore, they need to give you the resources that you need in order to satisfy their own mission. So that's going to be it for today. Thank you, Matt, so much for being a guest.
Absolutely. Thanks, Karl. Appreciate you having me.
Thank you for listening in to Motivated Money. If you like this or any other episodes, make sure to leave a rating and review the show. We love to hear your feedback and want to make this the best possible show for you. Also, if you like this episode, make sure you share it with someone you know who is seeking to raise capital. They will appreciate learning what you now know about raising funding. I'll see you on the next episode of Motivated Money.